So currently, as I speak, there is a lot of volatility, especially in the American markets. Have a look at the S&P 500. We can see that over the past month, we are down by over 1%. And it seems like the S&P 500 is making a new high every basically other week these days. But like I said, there is incredible volatility in the market. In the previous day, we were down by over 1.7%. Now in the US, the Nasdaq 100 is another benchmark for performance, especially around the US economy. In the last trading day, down by over 2%, and year to date still over 2.8%. Now over on Trading 212, I have been investing £100 every single day into the Nasdaq 100 just to see what kind of performance we can get over 30 days. Now, if you would like to sign up to Trading 212 and receive a free fractional share worth up to £100, all you have to do is to click the link in the description box down below. Alternatively, if you've already signed up to Trading 212 and haven't received a free share, all you have to do is to click the 3 horizontal line menu over here. Scroll all the way down until you see the section use promo code, and in this menu just enter my code JUBAIR and you should receive a free fractional share. So I chose to invest into the Nasdaq 100 because I previously did a series of investing £100 every single day into the S&P 500. The findings can be found out on this playlist over here if you're interested. But the reason why I chose the Nasdaq 100 now was because the S&P 500 has proven that is giving really good results over the past few years to decades. But the Nasdaq does differ quite a bit from the S&P 500 in that it is more technology focused. So I have chosen to go with the Invesco EQQQ Nasdaq 100. This is a distributing fund, which means that the dividends are paid out to the shareholders. Now, the only reason why I chose Invesco is to show you guys that, when it comes to picking a fund, really the differences are all personal preference, unless of course you want to get a hedged version of an ETF, which year to date, there have been big differences between the hedged version of something like the S&P 500 compared to something like the Vanguard S&P 500. As you can see over the past month with the iShares Core S&P 500, the return has been 0.57%. However, when we compare that with the Vanguard S&P 500, over the past month, the return has been a lot higher at 2.66%. Now, when we go to year-to-date figures, it all changes again. This is because there is a lot of difference between the value of the pound and the dollar, and all the currency differences, I should say. And that has been giving all sorts of different returns to UK-based investors, as of course, these ETFs invest into US-based stocks, so they buy in dollars, and there has to be some sort of currency exchange going on somewhere. I could have easily chose to invest into this fund here, the iShares Nasdaq 100, and on Trading 212, the iShares funds do give you a lot more information. So let's just explain what the Nasdaq is for those who do not know. So the Nasdaq 100 consists of around 100 companies. Realistically, it's actually more, so around 106 companies. The focus here is a lot more technology. As you can see by the iShares breakdown, about 50% in technology, 15.6% in communication services. I would class this as ICT, so technology and communication, in my opinion, should be grouped together. So over 60%, in my opinion, exposure to the technology sector, which, as you know, technology can be very volatile. We know that the Magnificent Seven have been basically the bearer of good news for the S&P 500. And here we will see from the top 10 holdings that they are present here as well. You can see Apple has a massive 9% weighting in the Nasdaq 100, Nvidia a massive 8%, and we know Nvidia has made huge movements over the past few years. Microsoft 7.5, Amazon 5.9, Broadcom 4.48, although not a Magnificent Seven company. Meta is here, 3.9%, Tesla is here, Costco, Netflix, Alphabet, and the list goes on. If you want to check out for yourself, just download the Trading 212 app. But anyway, I've been investing £100 a day into this fund here, the EQQQ £100 a day fund that I just created. So this fund was actually doing pretty well, but we saw yesterday literally that the Nasdaq 100 went down by 2%, and that's actually skewed the results for today. But you can clearly see here that, every day I have been putting in £100. You can also see that there is quite a lot of volatility. At some point, my return was a positive 0.3%, but currently as it stands, my rate of return is a negative 2.8% and a loss of £7.09. As you can see from the net deposits, I have been now investing £100 a day for 7 days now, so it's only just day 7. Over the past month, you can see that there has been an incredible amount of volatility. So perhaps maybe by investing £100 every day, we can reduce our risk to this volatility. Although generally speaking, past performance is no indication for future performance, but generally speaking, such indices do tend to go upwards as a form of projection. If you are intending to invest for the long term, of course, looking at the market every day is not going to really help you. These sort of series are just because viewers have asked for it and it seems to be very popular. Realistically, I would always lump sum my money, or whenever my payment comes in per month, salary or whatever, I would invest a lump sum and not really worry about trying to time where I'm going to put in my amounts. But at the end of 30 days, let's compare whether a lump sum would have been better compared to just, day cost averaging £100 every day into the NASDAQ 100. So make sure to check out some of my other videos and I'll see you in the next video.